We start with the markets, and Asian stocks are, as ever, taking their cues from what happened on Wall Street overnight. Swine flu is dominating sentiment after the World Health Organization raised its pandemic alert level for its outbreak. There are worries that the flu outbreak will slow the recovery in the global economy. So if we take a look at Asian markets, it's already having something of an impact here on reports that South Korea has confirmed its first case of the flu. But as you can see, markets are fairly mixed. We saw transport and tourism stocks continuing to fall from yesterday. Now, on Wall Street, the Dow Jones Industrial Average gave up a midday recovery and retreated about 0.6%, 50 points there. That's as the swine flu's death count in Mexico grew. Well, Professor Patrick McNutt from the Manchester Business School joins us now live in our studio to make sense of it all. So obviously we've been reporting about dismal economic corporate news over the last few weeks, and now we have swine flu in the mix. Is this a huge worry?
It could be, yes, because if we look back what happened with the SARS epidemic, it did have an impact on travel and definitely on corporate earnings. So it's the last thing that we need at the moment is something like a swine flu epidemic.
Right, and outbreaks of the swine flu, in fact, prompting several countries now to ban the import of pork from Mexico and the US, even though actually the World Health Organization has said there's no chance of catching the flu through eating the meat. That's raising the prospect that the disease is going to increase a lot of protectionism, raise protectionist sentiment around the world at a time when the economy is already fairly slow. How worrying is that? It
is worrying because if countries begin to stop to import agricultural product, it will impact, because already we're seeing a constriction on exports. And with exports being constrained, and now with imports, it could actually constrain world trade. And that's the last thing that we want to see happening at the moment.
Now, you mentioned SARS earlier, and obviously this isn't a distant memory. We saw SARS hit Asia 6 years ago. How did markets react then, and will we see a similar movement now?
It took a while for markets to react. I think after the first month, when we realized that the executives couldn't travel, for example, supply chain was constrained because one could not police the actual supply chain. It did constrain. By the 6th month, it did. And it happened then by second or third quarter earnings, we saw an impact on SARS. Now, I suspect that this will be more contained because of the experience of SARS. So Asia should be well protected, and many of the big corporates would have positioned themselves to take account of that.
All right, so let's take a look at those corporates now, because despite this potential pandemic, obviously things haven't come to a standstill. We are seeing earnings results from the likes of Honda coming out later today, and this after far more beleaguered automaker GM announced sweeping restructuring overnight. Will there be similar moves for Japanese firms like car makers?
I think there will be, because Honda now joins the club with Toyota, which has reported losses. Mitsubishi also has reported losses, and a lot of these losses are down to the fact that the yen is too strong, so it's impacting on their export earnings exposure. And as a consequence of that, you may find that they will cut back production in order to try and minimize their losses. But yes, the currency exposure for the Japanese automakers is something to be considered. And at a time when Japanese demand, domestic demand, is being constrained, the further effect of export restrictions would lead to a decrease in Japanese growth rates for the rest of this 2009 quarter.
And obviously we saw fairly bad economic news coming out of Japan from the cabinet forecast of the economy for the year, but they've also announced a bigger stimulus package. This is something we've seen across Asia, government spending more to try to boost domestic demand. Yes. Is it working?
It should work. It'll take a month or two to realize. I think we're looking now at what's called the second derivative effect. That is that earnings are declining, but they're declining at a decreasing rate. But the government stimulus is necessary. Japan has done that. China is continuing to do it. And indeed, right across Europe and the rest of the world, we're seeing a lot of government stimulus. But it is necessary and will work, but it'll take time.
All right, we'll leave it on that note. Professor Patrick McNutt, thank you.
Thank you very much.